Do you like the idea of trading indices but don't have a confirmed method that you can use daily? Well, in this video I'm going to show you one quick method that you can use to trade indices like US 30, German 40 and NAS 100 reliably and effectively with the best use of your time. So the goal with trading indices is that you're probably going to be sitting down and scalping. Not many people are going to be swing trading US 30, NAS or German 40. The volatility is too high and it will be too expensive for you to do so. So to start off, this method is entirely for scalping. The entire and whole focus of this method is scalping, and that's what we're going to start with. But first we've got to start on the daily chart, and this is just so you can get your bias. So on the daily chart you can see that I am looking for a bullish trend just simply based off the ALMAs that I've covered in every other video recently, the 13 and 50 period ALMA. You can see that they're currently crossed over and bullish, and we're on the bullish side of them, therefore we're only looking for buys. Now the two other indicators I have on my chart are very simple and straightforward. You've got Pip Hunter Momentum Extreme and Pip Hunter Back D from the Perfect Entry Indicator package. The settings on both of them are default. I just turned off all of the plots other than this one on Momentum Extreme, and then on Back D I have done something very similar, turned the plots from lines to areas, and I've set that as my settings, which I think, as far as I can remember, that is the default setting anyway. So the first things first, we're going to drop down to our scalping time frame, which in normal is going to be the 3 or the 1 minute chart. Now the way you can trade it is very easy. We know we're only looking for buys, so as soon as we get that nice crossover of the two ALMAs, along with confirmation from the Momentum and Back D, then we know what we can take. So we can take our trade from just here, for example, and we can see that in this case stop loss, we can just put it under the recent price action, which would be under these two sets of wicks, and then we can set initial take profit either based off structure, which we can look left and determine that maybe this would have been a good take profit, or we can do 1-to-1 and trail stop for the rest, at which point we would currently be at 5-to-1 and more. We would also have been missing this trade, but that's not so bad. We would have probably been entered for these, which may have stopped out at break even or as a small loss. But in general, you're going to find that we're going to be taking much larger and happier positions. When you find the daily is pointing down, however, we can focus on taking the bearish moves. If you want to be actively trying to catch some of these downward movements, then I would consider dropping to maybe the 4-hour or the 1-hour, and calling that your higher time frame instead, which would have allowed you to look for this as your downwards move, but then you would have missed this upwards move just the same. So that will give you some options, but I'm suggesting that you use the daily or the weekly as your higher time frame, because it's going to give you the most safest trend direction, just so that you can perform that a little bit better. Most people will find that it's easier to trade based off of what the daily trend is doing and join that than it is to trade off lower trends. So if you've enjoyed this video, consider leaving a like and subscribe, and I will see you all in the next one. Thank you very much.